Welcome to Lil Unfiltered. Today I'm going to talk about the final expat traps. This is part 4 in my Expat Survival Series and the final part in this series. And as I said, I'm going to talk about the final expat traps, which are state taxes, inheritance, and hidden U.S. rules abroad. Before I go any further, I just want to clarify that this is not meant to be legal advice, tax advice, anything like that. You'd need to consult a professional on that. But I'm just, I did some research and I took some notes and I'm bringing you what I've learned because I'm looking to move abroad. I am a slow traveler and I stay in a country for 1 to 2 to 3 months at a time and explore and just live. And I am retired and live off Social Security pretty much. But I also want to say that as I said, I'm no expert, but I had some questions. And so I looked this information up. And if you'd like me to go any further, please let me know in the comments. If you have any questions or thoughts on something you'd like to learn more about, and I can bring it to you, I'd be happy to. These are just questions that I had. And and this is more for expats actually living abroad, not slow traveling like me. This is for people who seek residency in other countries, okay? And I am looking to do that in the future more than likely. So moving on. Okay, you've heard me talk about, and I have 3 previous videos. The first one I talk about FATCA and FBAR. Then the second one I talk about Trump's tax changes. And then Social Security and Medicare and how those work abroad. But there's one last layer, and these are the hidden traps that can sneak up on you long after you think you've escaped. And I'm talking about state taxes that chase you across borders, estate and inheritance rules that follow you to the grave, and sticky obligations that most Americans abroad never see coming until it's too late. So these are the traps you need to know about before you even think about calling yourself free. First is the state tax trap. So let's start with state taxes. Most people think I've left the US, so I left my state taxes behind. Not always. Certain states are notorious for claiming you as a taxpayer even after you've moved abroad. Why is that? Because they argue you never truly broke ties. And that is California, New York, and Virginia. Well, there might be more, but California, New York, and Virginia are the worst. If you keep a driver's license, if you own property, if you vote in that state, or even leave behind your mailing address. And I do all of those things as a slow traveler, of course, but anyway, they might still consider you a resident. This means you owe state tax on your worldwide income, even while living in Spain, Thailand, or Romania. I know people who got letters years later demanding thousands of dollars. Why? Because the state claimed they never properly cut ties. So if you're planning to leave, don't just leave the country. Legally sever your ties to your state. Cancel your voter registration, give up your driver's license, close those last accounts. If you don't, they'll use it against you. And I'm not saying do it, that's up to you, of course. Estate and inheritance taxes. Something no one else wants to talk about, death. If you're a US citizen, your worldwide estate, not just your US property, but everything you own globally, is potentially subject to US estate tax when you die, even if you've lived abroad for 30 years. Now, the estate tax only kicks in above a high threshold, currently around 13 million for individuals. Most of us aren't sitting on that kind of wealth, but here's the catch. That threshold can change. It's already scheduled to drop in 2026 when part of Trump's 2017 tax law expired. And don't forget inheritance rules. If you plan to leave money or property to your kids abroad, they may face reporting requirements to the IRS, even if they've never lived in the United States. If you marry a non-US spouse, there's another twist. The estate tax exemption is much lower for assets left to non-citizens. That means if you leave property to your foreign spouse, the US could take a bigger bite. And for gifts, anything above $18,000 per year to a foreign spouse or child may trigger gift tax reporting. See the trap? You think you're free, but the US still wants a cut, even from the grave. And as I said, I'm going to say it again, but as I said earlier, I'm not giving any tax advice or legal advice. You need to consult professionals for that. Okay, owning property abroad. Now let's get into property. Buying a home abroad sounds like freedom, but US tax law treats foreign property differently. If you sell your house abroad, the IRS may tax the capital gain, even if your host country doesn't. If you rent it out, that rental income is reportable on your US tax return. And if you die owning it, the IRS can count it in your worldwide estate. Even retirement plans abroad, pensions, investment accounts, and savings often require special reporting on forms like 3520, 8621, 8398. Miss one and the penalties can be thousands per form per year. In other words, you don't escape paperwork by buying abroad. Sometimes you just multiply it. US source income abroad. Have a rental in Florida, the IRS still taxes that. Own US stocks, dividends, and capital gains are still taxable. Withdraw from an IRA or 401k, you'll pay US tax no matter where you live. And here's the kicker. Many foreign countries will also tax you on that same income. Yes, you can sometimes use tax treaties or credits, but treaties don't cover everything. And not every country even has one with the US. So do your research on those countries. So you could be double taxed even after moving abroad. What you can do now. So what can you do to protect yourself? Cut state ties completely before you leave. Don't give California or New York any excuse to come after you. Get estate planning in place. If you have a foreign spouse, consider special trusts or legal tools to avoid losing half your estate to the IRS. Know your reporting obligations. Foreign property, pensions, or accounts often trigger extra forms, and ignoring them is not an option. And I would, I wouldn't advise, but it's not a bad idea to consult tax attorneys when you're doing your taxes in both the US and the country you're living in, because just to make sure they're both on the same page and understand both the legalities in both countries. Where was I? Understand US source income. If you keep US property, pensions, or investments, budget for US taxes, and budget for US taxes and maybe double taxes. And talk to someone who knows both sides. I already said that, but I had written this down and I didn't realize it. A US accountant may not know foreign rules and vice versa. Here's the unfiltered truth. You leaving the US doesn't mean the US leaves you. The IRS has its claws in your bank accounts, your property, your retirement, even your estate after you're gone. And the state you left behind might chase you across the ocean. Your Social Security may shrink, your Medicare disappears. Does that mean you shouldn't move abroad? No. It means you move abroad with your eyes open. If freedom is your goal, you have to understand the price tag, because ignorance of the law isn't a shield, it's an invitation for the system to bleed you dry. So if you've made it this far, you're already ahead of most Americans who dreamed of living abroad. Knowledge is power, so don't let these final traps catch you by surprise. And check out the others in my series. I also talk, about a number of different things. I also talk about renunciating your giving up your US citizenship. Let's see. So that's it. That's the last in this series on unfiltered truth that you need before you take the leap. I hope it was helpful. Again, if you have any comments or suggestions, please leave leave them in the comments. I want to hear from you. And also let me know where you are traveling or where you are choosing to live abroad. I'm very curious. Thanks so much for watching, and I'll see you in the next one.